Have you ever jumped into a trade only to watch the market turn against you? You are not alone. Many traders struggle with timing their entries and exits, leading to frustrating losses. In this video, I'll show you a strategy that top traders rely on for consistent results, the EMA strategy. Join me as I explain how to use it effectively to transform your trading experience. In my last video about the top 5 technical indicators that can help you to trade smarter and not harder, I covered some of the best technical indicators for your trading toolkit. If you missed it, check out the link in the description to watch the video. Today, we'll be diving into one of my personal favorites amongst all indicators, the EMA. The exponential moving average, or EMA, is a technical indicator that helps to determine the reversal point and the trend direction of an asset price. The EMA's responsiveness gives more weight to recent prices as compared to the simple moving average that gives equal weight to all prices. The main principle of trading with the EMA is to trade in the direction of the trend. In general, scalpers and day traders tend to use 8 and 20-day EMAs, while swing traders might use 50 and 200 EMAs. When the shorter EMA 8 crosses EMA 20 from below, this is called the Golden Cross, signaling an uptrend is likely to begin. A great time to open a buy trade. Conversely, when EMA 8 crosses EMA 20 from above, this is called the dead cross, signaling the start of a downtrend. If you spot one of those, it might be time to exit your trade or open a sell position. It's time to see it in action and reveal some of the technical analysis secrets. And by the way, please leave a comment about your favorite indicator for trend analysis and which technical indicator you'd want me to cover in the next video. Let's get down to some action. Here's how to set the EMA on the Olymptrade platform. First, you click on the technical analysis icon. You scroll down to indicators, which we have here. As you can see, we have the EMA. With one click, it gets added onto your chart, but since we'll be using 2 EMAs to identify the trend direction, we would add one more EMA. That is, we click here, and then we have 2 EMAs. For short-term trades, you can use EMA 3 and EMA 6 for shorter-term trades, and then for long-term trading, you can consider either EMA 50 and EMA 200 or EMA 5 and EMA 20. So in our case, we would explore 2 EMAs, that is EMA period. First, we'll start with, let's say, EMA 3. We'll change the color from red to yellow. I think I like the golden color. For the next one, we can change that to green, which we have here. So as you can see, we have intersections, that is a dead cross right here. As you can see, we have the shorter term EMA intersecting with the longer term EMA 20, that is from above. So you have a dead cross, that is a price continuation downward. Here we had an uptrend. So at this point, since we are going to demonstrate the effectiveness of this strategy, let's use a duration that is 3 times larger than our time frame. So at this point, let me add one more indicator, which probably will be the Parabolic SAR, to follow the trend and determine the reversal point. So at this point, I'm going to open the down trade here because we had an intersection. So we'll continue with the trend. Back to the current time frame to 10, since we are trading on 30 seconds. So we almost have a golden cross here. Once we have an intersection, I'm going to open a corresponding up trade. That is a buy trade. So okay, so we didn't have an intersection here, but then we have the Parabolic SAR below the price chart. Let's see how the trend looks like on a 1-minute time frame. So here we realize that we almost have a dead cross, but let's see. I think the market will likely reverse. So let's move back to 10. Some kind of a microscopic, view of the market situation. So here we have the dot on top. I think I would go up for 2 times the previous amount. So here, as you can see, we have an intersection. Boom, we made profit. So loss compensated. Let's try one more. Let's see how it looks like on 15 seconds. So let's see. So 360, I'm looking forward to, recouping whatever has been lost. So let's check again. Once again, let's look at the trend on 1 minute. We have a possible uptrend. So next corresponding trade would be to follow the trend up. So here we made profit. Previous loss has been compensated. Let's check out the next one for confirmation of the trend. So let's see. I'm more tempted to go, up once again on the same amount, but then as a risk management, a healthy risk management strategy, once your loss has been compensated, you can move back to the initial trade amount. So boom, there you have it. We made extra profit of how much? In less than a minute or two. Let's go up once again. On 15 seconds, let's see a clear uptrend. Yeah. On 30 seconds times 2 of that. Let's see. Just move back to 10. See how it looks like. Boom, we made profit once again. So there you have it. Just a simple strategy even for beginners. If you want to take your trading to the next level, check out the video on trading with the MACD and RSI. You can find the link in the description. Now, it's your turn to share your thoughts. Have you tried the EMA? What was your experience with it? Drop your answers in the comments below and don't forget to like, subscribe and hit the bell button for more trading tips.